Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock, with news all eyes today are on the signals to be sent by the Reserve Bank of Australia. Inflation seems to be easing there, but the central bank is widely expected to keep its foot firmly on the throat of inflation with another rate rise. But first, American factory orders fell in January, mainly because of weak aircraft orders. This was as expected. But without this category, they rose and by a bit more than advance reports suggested. And South Korea is making progress on the inflation front, probably at the cost of its growth. Their February CPI rate fell below an annualised 4% rate, and the year-on-year rate slipped to 4.8%. We get their fourth quarter GDP growth data later today. And China has released its budget, and most of the focus has been on the big increase in defence spending. But it also is raising spending to increase its grain reserves in a clear self-sufficiency push amid ongoing concerns over food security there. And the EU retail sales were expected to rise 1% in January, recovering from a chunky December drop. But in the end, the rise was only 0.3%, which disappointed market analysts. However, the softness is all about lower levels of fuel and energy sales, which for them may be a good thing. In Australia, the Melbourne Institute's monthly inflation gauge showed prices eased sharply to under 5% at an annualised rate in February from January, from almost 11% annualised rate in January from December. This was the sixth straight month of increase in the index, however, bringing the year-on-year rate to 6.3%, which was the second highest since the series began. For sure, the RBA will have noticed this data ahead of their cash rate target review later today. And another 25 basis points rise is baked in now, and that will be their 10th in a row and take their cash rate target to 3.6%. Separately, the Aussie agricultural sector is in for a banner year this year on the back of very favourable La Nina growing conditions. They will produce product worth $90 billion in the 22-23 year, also aided by high global prices. The US Treasury 10-year yield starts today at 3.98% and up 2 basis points from yesterday. And the price of gold will open today at $1,851 an ounce. That's down $6 from yesterday. And oil prices start today up 50 US cents at just under $80.50 a barrel in the US, while the international Brent price is just over $86 a barrel. And the Kiwi dollar is down 0.5 cent at 61.9 US cents. Against the Aussie, we're down marginally to 91.9 Australian cents, and against the euro, also down 0.5 cent to 57.9 euro cents. That all takes our trade-weighted index to 70.1 and a retreat of 40 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.